Hello guys, welcome back to another learning video. So before I proceed, let me just remind you that I'm not a SEBI registered and this video is only for educational purposes. So in case you want to invest or trade in the market, make sure you consult your financial advisor. So let's go ahead. You can see that the market is in an uptrend for a very long time, all right? There has not been a major correction. We could have taken this as a correction phase. Okay, let me just draw it for you here. So this area, right? So this phase kind of look like a correction phase, right? After a very good bull market from 2020. So after that, there has not been a major correction. If you see, it's always moving up. So are we expecting some type of correction in the market? We don't know. Okay, no one knows. So but there's one thing which has given a signal about a market either retracing, I won't say a crash, but then retracing or consolidating in somewhere in this area. Okay, why? One, you know, and in elliott wave theory we always talk about patterns, right? Like this, we wait for 1 2 3 4 5, right? Which is making higher high. Okay, higher high, higher low, higher high, and higher low, and higher high. So this high becomes a support, right? Correct. And then this high, okay, this high become a resistance. So it keeps on going in this direction. So market tend to move in this type of direction. So according to this, we can see that it is the end in a weekly time frame. It is the end of this. So what happens after this 5 wave is done? Basically, we see something called as ABC pattern, right? 1 2 3, something like this, making a lower low, lower high, right, and lower low. So this is what we can expect from the market. Okay, so are we in that situation? So if we look in weekly time frame in this chart, we can see something like this. All right, one here, right, 2 3 4 and 5. So we may see a major retracement very soon. Okay, we don't know when. Okay, we never know when that major this thing will come in, but then we can expect something like this. So when this thing or this type of pattern is coming in, which level should we mark? Which level can be important? Okay, before I mark the levels, let me just show you the pattern, because some of you must be confused, seeing this, that how can I say this is Elliott wave pattern. So what I'm going to do is I'm going to change my candle to let's use Heikin-Ashi. Okay, so what I can see here is this has been a retracement phase, right? So from retracement phase, this red phase, this cannot be counted as a type of higher low, okay, because it's very small. See, these things we don't count minor these things. So what I'm going to do is this is one measure, right? Trend, measure again, up, measure again, and then this is also not very strong, but a measure again, and one more measure. So we're waiting for this phase. So either this thing can come even from here, okay, after going up this high, even going to 26,000, and it can happen. But we can wait for this type of pattern. This can happen in the market. So this is one thing which I want to say. Okay, so let's look at the levels. Which level, if this thing happen, which level should we consider? Which level is very important. So what I'm going to do is I'm going to use a Fibonacci retracement. Let me just remind you that my Fibonacci retracement is edited. It is customly done. So you can even use your own this one. It's going to be fine. Okay, don't get confused with this, because some points are missing. What I've added is a golden zone. Okay, this blue line is called a golden zone in the market, even in Fibonacci, these things. So if the market tries to move down from here, we can see that this area, okay, is a very important level. Not only according to Fibonacci, but even if I remove Fibonacci, we know about gap filling, right? So in this area is where the market give a breakout. Was making high, went down again, hit it up, and then break out from here, from a resistance. And now this can become a support, not only because it broke out from this level, but there is something called as gap. Okay. This gap is a support, and gap filling is very much required in the market. It always happen. Okay, So this can act as support. So next week, what can be the levels of the market? If you look in open option chain, open AI, you can why, right? Not open AI, open interest, sorry. So you can see that the support is in 22,000 level. See, there is a lot of Y written someone here. So that will be 22,000, right? So I'm gonna just mark it around here. So somewhere here. I need to go to lower time frame to mark this. What happened? That is not good. Okay, fine. It has reload. Okay, this somewhere this area. And then you can see the resistance. It can be around 22,300 as well as 22,500. This has more stronger resistance. So 22,000 somewhere. The net is not very strong. Yeah, somewhere here. Okay, not very precise, but then yeah, somewhere here. Let's go to 1 day time frame to see the structure properly. Okay. Okay, so this can be the area of interest. Okay, you can trade somewhere here. This will act as a very good levels in this zone. Okay, and then there is not only this. If we see here, one thing that I need to remind you all is that, see, in a previous day we can see this candle. Okay, this green candle. This is an inside candle, right? Inside this, we can see two weeks market was inside this candle. See? Inside this candle, right? There are two. One is doji, a type of one is like a type of hanging man, but we cannot completely say. Okay, kind of, no. So from this level, it has given a breakout with a strong push, a type of hanging man again. Okay, and kind of doji as well. So it has given a breakout. So it kind of looked bullish, but then, uh, you know, we never know how high market can go, right? But even though this is given a signal, make sure you are aware of 22,500 levels. Okay, this level. So this level would like, it's like how many points? I think it's not gonna be very much. Like 300 points is very less, right? So for me, I'll kind of stay away from buying. Okay, because this area is something that we're concerned of. And then selling, it's like unlimited, right? If we get an opportunity, even though my stop loss is hit, I'm still going to take a trade in selling. Even Friday, we can see that there was a selling opportunity, but the market did not move. Option did fly away. Same with Thursday as well. Okay, it reverses. Let's see how the market perform. See, we cannot even have a very what do we call? We cannot just assume, or if we're gonna fix our mind that I'm gonna trade bearish the day, I'm gonna trade bullish the day. Okay, yes, we can have an expectation to trade bearish. Okay, but then never expect to trade fix bullish idea in your head. What I mean by that is, let's not assume that see, the market has not opened, right? So I'm gonna assume tomorrow I'm gonna trade bullish. Never assume that. But you can assume that I'm gonna trade bearish tomorrow. Why? Because a bearish market is always more right than the bullish market. Okay, in bullish market, usually it only plays, either gap up and then consolidate. Okay, like I'll show you how it goes. This market, right, it'll give up around here, it will be here, and then it'll just move around here, play around here. No, but when there is a bearish signal, there can be fall, easy fall, right? So this is the reason I'm saying. So make sure you're aware of the market situation. Even I got triggered, but then that's fine. The higher it goes, the better for me to sell, right? So this is it for this video. I hope you understand and you have learned something out of this. So I hope you've enjoyed. Thank you so much for your time. Have a great time ahead.